For decades, silver has been the poor man's gold. It was the volatile, crazy cousin of the precious metals family. It crashed when you needed it, and it did nothing when inflation roared. But look at the chart right now. Something has broken. Silver is vertical. The retail investor thinks this is just another meme stock rally. They think it's Reddit trying to squeeze the banks again. They are wrong. This isn't a speculative bubble. This is a supply crunch. For the first time in history, the industrial demand for silver, specifically for solar panels and AI chips, has exceeded the mining supply. We are eating silver faster than we can dig it up. The vaults in London and Shanghai are bleeding inventory. The smart money knows that when a physical shortage meets a financial panic, the price doesn't just go up, it goes parabolic. Welcome to Silver Squeeze 2.0. To understand silver, you have to understand its schizophrenia. It has two personalities. Personality A, it is money. Just like gold, it has been used as currency for 5,000 years. It is a hedge against the debasement of the dollar. Episode 03. Personality B, it is an industrial metal. It is the most conductive metal on Earth. You cannot build a Tomahawk missile, an iPhone, or a solar panel without it. Usually, these two personalities fight each other. In a recession, industrial demand drops, crushing the price. But in 2025, we have the perfect storm. We have massive inflation, good for money silver, and we have a green energy boom, good for industrial silver. Both engines are firing at the same time. Smart money investors call this the dual thesis. It is the only asset that wins if the economy grows, solar, or if the economy collapses, currency crisis. Let's zoom in on the industrial side, because this is where the squeeze is coming from, specifically photovoltaics, solar. For years, analysts said engineers will thrift silver out of solar panels. They will use copper instead. The opposite happened. The new generation of solar technology, called TOPCon and HJT, actually uses more silver, not less. 50% more. Why? Because efficiency is everything, and nothing conducts electricity like silver. The solar industry alone now consumes nearly 20% of the entire yearly silver supply. By 2027, it could be 30% or 40%. This is a black hole of demand. Once that silver is pasted onto a panel and put on a roof, it is gone for 20 years. It is not easily recycled. We are taking a precious monetary metal and burying it on rooftops. The mining industry cannot keep up. You can't just turn on a silver mine. It takes 10 years to permit and build one. We are facing a structural deficit that is mathematically guaranteed to drain the vaults. If the deficit is so bad, why didn't the price explode years ago? Because of the paper market. The price of silver is not set by you buying a coin. It is set by traders exchanging futures contracts on the COMEX in New York. For every 1 ounce of physical silver in the vault, there are often 300 to 500 paper ounces traded. Bullion banks have used this leverage to suppress the price for decades. When the price gets too high, they sell 1 billion ounces of paper silver that doesn't exist to smash it down. But this game only works as long as nobody asks for the real metal. That changed this year. Investors in Shanghai and India stopped trusting the paper. They started taking physical delivery. They are draining the COMEX and the LBMA vaults. When the physical inventory gets critical, the paper leverage breaks. The tail stops wagging the dog. We are seeing the definancialization of the silver price. Reality is taking over. Before you mortgage your house to buy silver, you need to study history. Silver is the most volatile asset on Earth. It is the widowmaker. In 1980, the Hunt brothers tried to corner the market. Silver went from $6 to $50 in months. Then, the regulators changed the rules. They raised margin requirements. Silver crashed back to $10. In 2011, silver hit $50 again. Retail investors piled in at the top. Then, margin requirements were raised again. It crashed to $13. The lesson? The game is rigged. When silver goes parabolic, the exchanges will change the rules to protect the short sellers. They will make it expensive to hold the position. If you are buying with leverage, futures options, you will be wiped out even if you are right. You must hold the position in a way they cannot liquidate. Physical metal or fully paid unleveraged shares. There is another risk that nobody talks about. Confiscation. Not from you, but from the market. Silver is a strategic military metal. It is in every Tomahawk missile, every torpedo, every fighter jet. If we go to war, episode 0 of politics, the government cannot afford to let silver trade freely. They might declare it a strategic asset. They could halt exports. They could cap the price for national security. This happened with nickel in 2022. The London Metal Exchange simply canceled billions of dollars of trades to save a Chinese tycoon. If you are betting on a squeeze to $500 an ounce, be aware that the government might just say no. They might set the price at $50 and force miners to sell to the Defense Department. This is why holding physical metal outside the system is the only true way to capture the upside. So, here's the question on your mind. Is it too late? The price is pumping hard. Your taxi driver is talking about silver. This is usually a contrarian signal to sell. When the crowd arrives, the smart money usually exits. However, look at the gold to silver ratio. Historically, it takes 15 ounces of silver to buy 1 ounce of gold. Today, it takes roughly 80 ounces. Even after this pump, silver is historically cheap relative to gold. If the ratio returns to the historical mean of 15:1 and gold stays at $2,500, silver should be $166 an ounce. We are nowhere near that. The smart money view is we are in the early innings of a multi-year structural bull market, but we are overdue for a short-term correction. Let's summarize the investigation. The silver squeeze 2.0 is real. It is driven by physics, solar, and fear, inflation. The smart money playbook is disciplined. 1. Physical core. Own physical coins or bars. This is your doomsday insurance. It has no counterparty risk. If the price is capped or the exchange closes, you still have the metal. 2. PSLV, not SLV. If you buy an ETF, buy the Sprott Physical Silver Trust, PSLV. They actually hold the metal. Avoid SLV, which is the playground of the bullion banks. 3. Don't use leverage. Silver will swing 20% in a week. Leverage will kill you. Buy with cash you don't need for 5 years. 4. The pullback. If you don't have a position, do not buy the all-time high. Wait for the inevitable smash. It will happen. Be the buyer when everyone else is crying. Silver is the most manipulated, volatile, frustrating asset on Earth, but for the next decade, it is also the most essential. This is the smart money wisdoms. The future belongs to the owners. Thanks for watching. Like and subscribe. See you next time.